Hello G-traders, let me present you with a recap of the American session. The US stock market opened with the heaviest losses in the recent months. The Dow Jones slumped by 2.4%, the S&P 500 fell 3%, the Nasdaq incurred the sharpest losses of 3.6%, and prospects of another global crisis caused investors flight to safe haven assets. While high-tech stocks are trading in the red, the US dollar is flexing its muscles amid market turbulence. The S&P 500 opened this trading week having lost 127 points or 2.95% from the closing price on Friday. And this large fall comes as a no surprise. Investors are selling risky assets. As a result, stocks of high-tech giants are losing ground. Instead, investors are shifting focus towards commodities and the safe haven assets. Under such turmoil, experts predict the first rate hike by the Federal Reserve in March 16. And this move will reinforce negative sentiment in the stock market. The S&P 500 could fall as low as 4,000 points in the medium term. Some experts warn about a deeper plunge. On the other hand, the benchmark stock index is still holding above the low of February 24, so the market might rebound anytime on the back of positive news from Ukraine. From the point of macroeconomic data that could impact on the index is the US inflation data that is due on March 10. Until then, no economic data could outline the geopolitics. Under such circumstances, analysts expect the index to trade inside the corridor between 4,160 and 4,240 points. The US dollar is asserting strength amid escalating global risks. Its index settled above 99 points and is still hovering at the levels seen in May 2020. Obviously, investors are seeking shelter in the US dollar as a safe haven asset, assessing geopolitical and economic risks. A rapid rally in the commodity market fueled fears on further inflation acceleration, so the US Fed might resort to aggressive monetary tightening and raise the interest rate by 50 basis points instead of the expected 25 basis points. The inflation report is expected to cause alarm with the CPI at another multi-year of 7.9%. And today, the US trade balance report looked positive exports and imports. At the same time, the balance again printed a deficit. The actual data was worse than expected. Even a lower trade deficit could hardly cause a trend reversal in the US dollar under global risk aversion. The outlook remains bullish. Analysts predict that its index will test the level of 99.30. If the index overcomes this resistance, it will head for 99.50. Indexes like markets depend on geopolitical events, so the US dollar index could also retrace on global news. Today, the corridor for the index is defined between 98.90 and 99.50. The greenback is setting the tone for the USD CAD pair, outlining a rapid rally of oil prices. Yesterday, the Canadian dollar weakened to 1.2870 against the US dollar, a 2-month low. The currency pair is set to trade higher amid mounting economic and political risks. The oil market is very volatile for the time being because oil is now being used as a speculative asset. Investors are poised to earn from the geopolitical hype. The Bank of Canada increased its key policy rate by 25 basis points on March 2 for the first time since October 2018 in an effort to push inflation to the target 2%. The USD CAD pair is likely to trade in the corridor between 1.2700 and 1.29. Bitcoin managed to gain in value yesterday. The digital token rose 2.5% to trade at $38,789. The steady crypto market proves that it's too early to give up virtual currencies. Thus, some buyers entered the market. On the other hand, Bitcoin's correlation with the high-tech giants is still valid. Later this week, Joe Biden's crackdown on the crypto industry and the US inflation data will deliver a blow to the crypto market. Both factors are bearish for the stock indexes and could also knock down Bitcoin. The ongoing upward move does not look like an uptrend. If the price can settle at the current levels, the next interim resistance is seen at $39,325 and further at $40,000. Otherwise, the price could reverse downwards to $37,500. To sum up, the US dollar is the winner among all financial instruments. Global markets are vulnerable to any escalation, including economic sanctions, political statements, and the news on the military front. So, global investors are braced for further turbulence, seeking shelter in safe haven assets. Subscribe to our channel to keep close tabs on market news, and see you tomorrow.